Welcome to Thackray's Market Update July 2013. Today we're going to look at the danger zone that lies ahead for the S&P 500. Although the stock market can rally for the next 2 to 3 weeks, as we enter into the earnings season in July and investors tend to push up the prices of stocks in anticipation of positive earnings, once we get past mid-July, the S&P 500 tends not to do well. In fact, from July 19th to October 27th, from 1950 to 2012, it's produced an average loss of 0.4%. August tends not to be a good month. From 1950 to 2011, it has been totally flat on average, 0.0%. September, in the same number of years, has been the worst month of the year, producing an average loss of 0.6% and only being positive 44% of the time. Yes, the stock market can rally in this time period. In fact, we've seen some rallies in the last few years in August and September. But there's usually one or three causes that produce a strong rally. The first one is if the market's bouncing off a major bottom with a big correction. That's not the case this year. Or the economy is improving dramatically from a recession. That is definitely not the case this year. Or the last condition is that there's an increase in liquidity coming to the market, such as quantitative easing, which has been the case in the last few years. But it is definitely not the case this year, as the Fed is talking about tapering. So at this time, investors need to be cautious in their portfolios. Let's take a look at where the market is right now. The S&P 500 has actually been doing very well. It's been producing higher highs and higher lows. It wasn't until about the third week in June did we see that trend break down. What we saw on one day was we saw the S&P 500 break through its upward trend line, break through its 50-day moving average, and break its support level at 1600, all in one day right here. This was now indicating that the market was becoming weak and investors need to actually be taking action. We've seen the market rally back up, and at the time of shooting this video, the S&P 500 is about 1600. Over the next 2 to 3 weeks, it's possible that we do see the market rally. It's highly unlikely that it'll actually go past its top that it produced in May. If it were to do that, that would be very positive. More than likely, we'll actually see the S&P 500 turn down below 1600. If it breaks below 1525, as I mentioned in a previous video, and some other people have it at 1540, but if it breaks below 1525, which has a little bit of a buffer, the S&P 500 is in serious jeopardy of losing all of the gains that it's made this year so far. We're entering into the danger zone, and investors need to be cautious and adjust their portfolios accordingly. Thank you very much for joining me today for this video, and please join me on the first Monday of August for the next video. Thank you very much.